Joining me now with where she's finding opportunities is Gina Sanchez, CEO of Chantico Global and a CNBC contributor. Gina, opportunities, where do you see them? What do you like?
Well, right now, I think given we have so much to unpack from everything we've learned this week, but I think the biggest thing that we're going to face is the fact that the pandemic is going to have a long tail to it. It's going to continue to have surprises like Omicron. And we're actually betting in Thermo Fisher and Abbott Labs because we think testing is going to be the moat that sort of gets us from fears about whatever the new variants are to eventual solutions.
Okay. And what has you more kind of concerned as an overall gauge of what happens next? The jobs report or what we heard or didn't hear from the Fed?
So, I think that the jobs report I think this jobs report will be the most scrutinized report that we will see in a long time. Its top number wasn't that great, but when you look into the jobs report, it actually signals an economy that is still recovering. And if anything, it reflects the fact that there are actually a lot of jobs open. And the disappointing number was because companies couldn't find people to fill those jobs. So that's kind of an interesting point. But that means that wages will be growing, inflation is growing, and you get the story from the Fed that they're going to begin tapering with the intention of hiking rates by 2022. I think that's going to take a lot of froth off the market. And the biggest concern that we have is that the growthier parts of the market are just very, very, very highly priced. And if we see monetary support start to wane in 2022, support for these crazy multiples will also wane.
At what point, and maybe it's certainly different stock by stock, but does valuation coming down and fundamentals still being good cross and you start to get really great values perhaps in names that are growing at a pretty good clip, but were just valued at a ridiculous multiple?
Well, so you're talking about the process of growing into your growing into your multiple,
or maybe falling into stock-wise a value situation. Yeah.
Right. So you can get that in both directions, certainly. But I think that it will be a while before we have the falling into sudden value. If anything, the market from the beginning of the pandemic was really counting on companies growing into their multiples, that all of this would be temporary. We would eventually see this unlocked demand come into the market. And we have seen some of that. But I think one thing we learned this week is that consumers and households are not spending down the massive savings that they have amassed during the pandemic. And that's a little worrisome because it means that we may not grow into some of those multiples and we will have to see some of them come down.
What if we start to see M&A on the back of some of these multiples coming down? Is that something that investors should pay attention to as a signal, or perhaps just ignore because who knows where all this bottoms out?
Well, right now, I think that there are just too many dynamics at play. I think M&A would be a consolidation signal and would send a signal to the market that it might be time to take your chips off the table. But if anything, there are still big parts of the market that are quite healthy and trends that were in place before the pandemic that are still going to be continuing. You look, for example, at what's selling off. You have huge parts of the tech market selling off right now, but that's probably the most optimistic story that's out there that isn't going away.
Yeah.
So, I think that you have to look at this on a stock-by-stock basis.
I guess I was partly wondering if M&A could signal a bottom at some point because, hey, if the folks at the corporate level doing some research are buying because they see value, maybe others should as well. But do you think no?
Well, I think that M&A you're right, it could certainly signal that. But you also have this sort of mass amount of SPAC issuance that may actually signal other things. So, I worry a little that the excess money that we threw, the support that we threw at the pandemic, which was obviously very badly needed, at this point is just froth in the market that needs to be taken out. And some of the valuations are not going to be justified.